SMCI stock. What's it worth? Where's it headed from here? Today we're going to be taking a look at the fundamentals, and then we're going to run a valuation to see what the stock could be worth and where it could be headed in the future. Super microcomputer, we have price per share of $958.93, a price to earnings ratio of 74, a market cap of 53 billion and an enterprise value of 49 billion. We have cash debt ratio of 1.89, so for every dollar of debt, they have $1.89 of cash to pay down their debts. Looking at their profitability, we can see that versus the industry, their margins are fairly average. Versus history, their current is 16.39 for gross margin, with a median of 15, so above the median. Operating margin 9.4, with a high in the last 10 years of 10.68. Net margin 7.9, with a high of 8.98 in the last 10 years. And free cash flow currently in the negative. I use these margins to tell me something about the business, but for management I use ROE, ROA, ROIC, and ROC. And for each of these, it does look like the management is performing exceptionally well, both in the industry as well as historical performance. Their price to earnings is currently 74, a high in the last 10 years of 88.99, which they just had recently, and a median of 18. Trailing 12-month revenue of $9.2 billion. Looking at their financials on a trailing 12-month basis, we can see revenue steadily increasing over time, and we see net income growing alongside it. Their cash pile looks to be increasing, and currently it's about double their debts. We do see share sales here, and they just had a large share sale, so not exactly great for shareholders, but to see what's currently priced in and where it could be headed, let's run a DCF. So in the DCF here, we do have fairly predictable business, and we do have numbers for earnings per share on the 10-year, 5-year, as well as 3-year, and nothing for free cash flow since they are in the negatives. So basing it off earnings per share, let's see what's currently priced in. So currently there's about 32% growth priced in for earnings per share for the next 10 years. In the last 10 years, they've achieved 23% annually. In the last 5, 63, and in the last 3, 94. So there is some acceleration, it looks like, in their earnings per share. The industry that surrounds SMCI, which is AI and hardware for AI, is predicted to grow at about 4 times in the next 5 years. So the way that I interpret that is, if this company were to retain the market share that they have today, then they should be worth about 4 times what they are today in the future, based on their earnings and everything else. So if the industry does grow at the pace that they're expecting AI and the hardware industry for AI to grow at, then we could see significant upside and stronger growth. But it has had a huge run up this year, and it has recently been added to the S&P 500. So we are seeing some volatility around where the price is at now. If it were to grow in the next 5 years at, let's say, 50% a year, and then have a terminal stage after that, I think this is fairly reasonable for 5 years to double every 2 years, and then have a terminal stage after that of 10 years growing at 17%. I think there is still some potential here, but that's only for fair value. The stock could trade for a premium or a discount. I don't like to see that there's no free cash flow, because free cash flow allows the business to invest back in itself, and I believe that's also why the company is deciding to sell more shares so they could raise some funds and grow the business. But all in all, it doesn't look cheap. It doesn't look like a screaming deal to me, but I do like the idea that the industry is going to be growing substantially in the next 4 or 5 years, and as long as they can retain the market share that they have, if the industry is going to be growing like that, then it looks like this is maybe even a fairly reasonable bet. And who knows, it could grow faster than this. This is only a 5-year estimate for their growth stage. Usually I am pricing in 10-year growth stages, but 50% for 10 years is a serious amount of growth. So even if they were to grow at 30% for the next 10 years, and then 10 years after that, grow at 14%, there's still some upside potential. The stock does not look cheap now, but in the next 5 years, we could realize that it was a great buy opportunity. But that being said, this is my analysis of SMCI. If you like videos like this, leave a comment, like, and subscribe, and I'll see you next time.